Hi, guys. Today we're going to talk about casualty insurance. The course is property and casualty, but today we're going to talk about casualty insurance. And casualty insurance would cover, let's say, auto insurance, personal auto, commercial auto. And also, I want to congratulate you to making it to module number 4. There are 8 modules in the course, and Teachable recommends 4 modules. However, in order for me to get all of the content into the course, I had to put it in 8 modules. So give me some feedback. Let me know if um, 8 is too much or if I should split it up into 2 separate courses. I didn't want to split it up into 2 courses, so I said just put it all in one. And I know for me, this information is pretty easy, but for other people, it may be a little bit hard to keep up. Now, go ahead. You can pause me, grab something to eat. I'm feeling a lot better today. I hadn't been feeling well the last few days, so I took a break and it's been a few days since I've recorded. So I feel like I'm a little bit fresh today. Today is my Sunday. So if you need to pause me, grab something to drink or some notes, some paper to take notes, go ahead and do that now. I want to think this module is not going to be as long as the other ones, although it may be, it's a lot of slides, but it may not be as much information on the slides. And then it may not, for me, be as intense, but for you, it may be a little bit intense. So I want you to take notes. You are going to need this information to pass the state exam. So you definitely want to have this information at hand. Okay. Guys, I do like quotes. We passed the copywritten slide. Please don't put my information on the internet. But I like the quotes. And today our quote is, "The difference between a successful person and others is not a lack of strength, not a lack of knowledge, but rather a lack of will." Okay, now let's talk about that a little bit. I just changed the volume. If your volume changes, because I just changed the volume because my voice is really low. I want to make sure you guys can hear me. Okay. Yeah, so with property and casualty insurance or anything that you go out to do, I think that with strength, let's say take strength for an example. You can look at a boxing match and all this, sometimes it's not always the guy who's the strongest that wins, it's the guy that has the most heart, the most will. Same thing with basketball, baseball. It's not the better team all the time, it's the team that gets out there and they have the will to win. So with property and casualty, anything you do moving forward, it's your will, And I look back at again how long it took me to put this course together. Even like sitting here doing the video content. It's about will, and it's about wanting to do something and be successful. Okay, so I'm going to suggest here that you guys always work towards your goals. Okay. So again, we're going to talk about casualty insurance today. Casualty insurance would include auto insurance. We're going to talk about personal auto. We're going to talk about commercial auto. Okay. And then again, what is casualty insurance? Okay, so if you look up the word casualty insurance in a dictionary, I don't know what it says, but let's say for our reference, casualty insurance, also known as liability insurance. Casualty insurance involves claims that involve a third party. There are 3 parties: the insurer, the insured, and the claimant. Okay, so moving into this world of property and casualty insurance, you're going to need to know that, right? Who's the insurer? Well, for me, it would be the company that I work for. The insured, let's say that would be you. If you called me and you said, "Hey, Carmen, I want some insurance," you're the insured. I get you some insurance. And the claimant would be the person who, let's say, if you got into a wreck, it was your fault. The claimant would be the person calling to say, "Hey, I got a claim against this person's insurance because they ran into the back of my car," for example. Okay, so let's look at the claimant. Okay, when it comes to auto insurance, that's the person usually on the phone calling the claims department. Okay, if you're selling insurance, if you are writing policies every day, you really don't talk to the claimant. You talk to the person who you're selling the policy to on the initial side. Okay, so if something happens, So for that client, you say, hey, something happens, what do? You call the claims department. Don't call me because I don't handle claims. And then, guys, this is real life right here, okay? In my job every day, I've been advised not to even talk about claims with customers. Why? Because you might tell them something that's not true, or you might tell them something and then they may be setting you up and recording the conversation, and you tell them, oh, well, yeah, this happens, then this, or yeah, if that happened, then this, and then it may not be true, or they may say, oh, well, your agent told me this, so you got to be careful with claims. I mean, that's 100% real world. I have people every day call me homeowners. I had a guy yesterday, Saturday. I did work a few hours on Saturday, and I had a gentleman asked me about his homeowner's policy, and I'm telling him, yeah, yada, yada, blase, blase. But then they want to start getting into claims, okay? And I can't talk about claims with you. I can get you over to the claims department if you have a question about claims, but if it's a covered loss, yes, they will pay for it. But they want to get into detail. What if this happened? What if the dog died, the cat ate the rug, and the house fell down? Well, I don't know. They send investigators out. If it's a covered claim, insurance company will cover you. Okay. So my jewel here is don't talk claims with your customers. Okay. There is a claims department. Get them over to the claims department. Okay. I'm going to read this slide right here really quickly. The claimant comes into the policy when a loss occurs, resulting in injury or other damage to the third party. Legal liability. Okay, so let's talk about legal liability. In the state of Texas, in an auto policy, your legal liability limits are 30,000, 60,000 on bodily injury. They're 25,000 on property damage. Okay, and you need to know those numbers. They may be on the test, depending on what state you live in. You need to know what the state's limits are on liability, and that is the state requirement, right? That you have to carry liability insurance. Okay, you don't have to have medical. You don't have to have comp and collision. Unless you have an auto loan, sometimes they require you to have comp and collision. But if you're just, Joe Blow, I want some insurance, you have to have the state minimum, which is liability. That's the law. And that's why people buy insurance. Okay. So let's talk about a tort. A tort is a legal term that refers to injurious harm inflicted by one party on another. Torts are either civil, which is negligence, or criminal, which are deliberate. Unintentional torts are acts caused by negligence on the party of one party onto another. Okay, I know we're gonna get a whole bunch into this, but they're just that. It's either you're by accident or on purpose. And I guess again, if you get into an auto accident, you didn't mean to do it. It was on purpose. It was an accident. That's why I call it an auto accident. Okay. Intentional torts are acts that are deliberate. The law permits a person intentionally harm to seek legal action. Okay, so that's if you do something intentional. But with insurance, a lot of times the acts are accidents. Most times they're accidents. Okay. And like I said, with the state of Texas and most states, you have something called liability insurance. Okay, auto liability. That's the minimum in most states. Now, when you look at liability, there are different kinds of liability as well. Okay, this is aside from the auto insurance and your limits on liability insurance. They have other liability, okay, definitions. There's something called vicarious liability. There's something called absolute liability. And there's something called strict liability. Okay. Now, vicarious liability extends liability to a person who is held responsible for the conduct of another person. An example would be a parent responsible for their child. And I'm sure you all have heard of stories where the kid goes out to some 100% reckless, and the parents are like, oh, I didn't know he took my gun out my closet this morning. You know what I'm saying? Reckless. So now the parents are responsible for that. I told my son here recently that, although you're an adult legally, I'm still responsible for you until I was 26 years old. Okay. Because you still can't support yourself. So I have what vicarious liability if he does something reckless. Okay, so look at absolute liability. Absolute liability, the first party is insured, may be held liable for a loss suffered by the third party, even in the absence of negligence. Okay, so that's absolute liability. Okay, so that would be insurance, is kind of that one, right? So let's say you're insured, you hit somebody, now you're responsible for the third party because you did something, um, and you did something that caused injury to that person. Okay, so let's look at strict liability. Strict liability is usually applied in cases of product liability, where the manufacturer produced a defective, for example, automobiles, Peloton, and food products. Okay, so let's get Peloton. There was a thing here, what, months back when people were getting injured on their Peloton. The kids got injured, what have you. But that would be considered strict liability because it has to do with a product or a defect in a product. Food products. Let's say if you put out a food product and people got sick behind it, that would be considered strict liability. Okay. So with those liabilities also comes damages, right? So let's say if you did something wrong, you had to go to court, right? They have different kinds of damages that they can impose on you. They can impose compensatory damages or they could impose punitive damages, okay? So compensatory damages are used to provide the claimant with restoration of their value prior to the loss. Okay, compensatory damages. That's kind of insurance, okay, because they're trying to get you back to where you were before the accident occurred. So those are considered compensatory. Let's look at punitive damages. Punitive damages are awards made with designated purpose of punishing or discouraging certain types of behavior. Okay, those are a little different. Let's look at the types of losses. Okay, so when you're looking at an auto policy, and I write auto policies every single day, the first two lines, you have what? Bodily injury, and then you have property damage. Again, in the state of Texas, I don't know what state you're in, but you want to look that up. You want to you can go to your Department of Insurance website and look at what are the limits on liability in my state. And they'll tell you bodily injury, Texas, 30,000, 60,000 is 30,000 per person, 60,000 per occurrence. You need to know what that means. We're going to go over that a little bit later. And then the next line will say property damage. What is the limit? The minimum is 25,000. When I give you those limits, know that they start at 25. It can go up to 50, go up to 100. It can go up to 250, go up to 500,000, go to $1 million. Okay, on limits on liability. So what that means is if you cause an accident, that's how much the company would pay in the event of an accident. Okay, so let's look at bodily injury. Bodily injury is an illness, sickness, disease, or harm, including death, that results from negligence of one person toward another. So let's say, for example, again, you're driving, you get into a wreck, boom, somebody dies. I mean, that's like the worst thing that could happen, but let's say that happens. You have to pay, your insurance company would pay for bodily injury. So when you're advising people, you may want to tell them, hey, maybe you should raise that limit to 50,000 or 100,000 because what if somebody dies? What if you get into an accident? But what I found on a daily basis is people buy insurance not based upon the damages that they may cause. They buy insurance based upon what they can afford, which is dangerous in our country, but that's just kind of the way it happens. Okay, so let's look at property damage. When you look at property damage, again, the minimum I said was 25,000 in the state of Texas. Check your website, Department of Insurance website, to see how much your property damage limits are in your state. So property damage would include what? Physical damage resulting in loss to property owned by a third person. And I talk to customers every day, and they may ask you, well, what is property damage? Well, if you wreck somebody's car, I guess would be the best example of that. You're driving, boom, you hit somebody's car. That's considered property damage because they own that vehicle. Okay, now in an insurance policy, when I write a policy every day, some people call and say, well, what are you looking for? Are you looking for just liability, or are you looking for full coverage? And they'll say, oh, well, I want just liability. Okay, fine. So that's the bodily injury, property damage. That's it. That's considered just liability. Doesn't include any other coverages. And again, why do people do that? One, they may do it because the car is old, the older model, and not worth a whole bunch, and they don't want to pay a bunch of money on insurance because it's not worth a whole bunch anyway. Two, people do just liability because they can't afford full coverage. So they just get the minimum. Okay. So one of the options on an insurance policy or on a quote, when I do a quote, is something called medical payments. People could get either personal injury protection or they can get medical payments. In the policies that I write, all companies are different. Okay. So I'm not saying that this is going to be at every company or, everywhere you work, but some companies, they offer medical payments coverage on the policy. Okay. What are medical payments? Casualty insurance also provides a benefit in the form of medical payments to others. So let's say, again, you're liable, you're driving down the street, boom, you hit somebody, they're in the hospital, they're in the house, jacked up, and they got bills to pay for medical. Your insurance will cover that if you have medical payments coverage. I don't normally get medical payments coverage in my insurance, but after working in the industry, I'm like, maybe I should, because for a long time, before I started working in the industry, I thought medical payments was for myself, not for the other person. And no insurance agent ever took the time to explain that to me. And I'm sure you probably have the same experiences. So I never got it. But after learning about this stuff, it's like, wow, maybe I should get that, because it covers not just me, it covers the other party. Okay. This coverage, not the typo, I just caught myself reading through this. This coverage may be provided by the insurer, second party, to a claimant, third party. The purpose of this protection is to prevent lawsuits, okay? Most policies allow up to 2 years after an incident to file a claim. That's on what? Medical payments, all right? Personal liability insurance. When a claimant suffers financial harm as a result of negligence of the insured, that is neither due to bodily injury or property damage. Okay, that's considered personal liability insurance. This type of claim is addressed with personal liability insurance. Coverage for personal liability may be provided as an endorsement to the policy or as a standalone policy. Okay, so that's something different. That's not the basic coverage when somebody calls and says, I want just liability. Okay, personal liability is a different part of an insurance policy. And in fact, it's probably not on that first page. This is an endorsement. So this is something you have to add on to the policy. Okay, so examples would be libel, slander, infringement on copyrights, or false imprisonment. Okay, we're not going to get too much into that, but note that personal liability insurance covers libel, slander, infringement on copyright, or false imprisonment. Accidents and occurrences. What is an accident? We talked about that. Again, let's say, for example, if you're driving down the street, boom, you hit somebody, or you drive through a stop sign, you don't see the stop sign, somebody's coming the other way, boom, you hit them. That's an accident. Okay, you didn't mean to do it. So accidents are events that are unforeseen. You didn't know what's about to happen. You didn't expect it to happen. You're on your way to the grocery store, boom, you're in a car wreck. Okay. Unintentional and unexpected that results in danger or a loss. Okay. What are occurrences? Occurrences include accidents or exposure to certain conditions on an ongoing or continuous basis. An example, exposure to asbestos that results in bodily injury or property damage to a third person. So, occurrences. Okay, I want to use it in a different way, but I'm going to leave it the way they have it there. Okay. But they're saying ongoing or continuous basis. Let's say a good example of occurrences in this definition would be if you're working at a company and it's an old building and it's asbestos inside the walls or whatever that is, it comes out, gets in your lungs, you get sick and you die. That would be an ongoing thing that kept happening. And then in the result of that, you've gotten injured. Types of casualty insurance. So when you look at the types of casualty insurance, there's something called personal auto and there's something called commercial auto. I don't know if commercial auto is going to be on the exam. I can't remember, but I know personal auto questions will be on the exam. Now, the reason I included the commercial was because you may find yourself, it may be something on the test in commercial, you just never know. And then you may find yourself in an industry where you're working with commercial auto. So you want to know a little bit about it going into the field. Okay. So we're going to talk about automotive insurance, business auto, casualty insurance, and commercial auto. Personal auto. We're going to talk about it, but I'm sure most of you have a car, you've probably driven, you probably have insurance, you probably some exposure to personal auto insurance. But it's funny because when you get in the industry, your perspective kind of changes, okay? So personal auto general coverage provisions would be what? Liability insurance, we just talked about that. Medical payments coverage, we talked about that. There's something called uninsured and underinsured motorists. Write that down. I didn't put underinsured, so I'm going to go back and edit that and put underinsured motorists. There's also coverage for damage to the insured's auto duties after loss. Okay, so we covered the first two. So let's go over number 3. Number 3 is uninsured motorists. What is that? That's like if I'm driving and somebody hits me, boom, out of nowhere, and I'm like, okay, well, who's your insurance company? Like, I need to get my car fixed. And they're like, I don't have insurance. Like, you don't have insurance? Me, you don't have insurance. So that's called uninsured motorists, right? Because there's somebody out there driving. There's a lot of people out there driving without insurance. So in that event, if I have coverage called uninsured motorists on my policy, then my insurance company would pay for that accident because this person does not have insurance. Okay. So some people like that on their policies. Some people don't. On my personal auto, I have it on my policy now. Some people don't get it. Why? Because it's expensive. Not expensive, but it's more cost onto the policy. And then some people may not get it because they may have an older vehicle and they may not want it because, oh, my car is old anyway. Somebody hits it, no big deal. So I don't need uninsured motorists. But then there's also something called underinsured motorist coverage. Now, underinsured motorist coverage is the same thing. It's not the same thing, but it's kind of the same thing where if you're driving, somebody hits your car, boom, you go, okay, well, who's your insurance company? You're writing it down, and then you find out they've totaled your car, you got $50,000 worth of damage, and their insurance is only going to pay $30,000. Okay, who's going to pay that other $20,000? I'm not going to pay it. They can't afford to pay it. So that's where your insurance company comes in again, and they pay that additional $20,000 to get you back whole again, right? To get you back to the place you were before the accident. Okay, so you have uninsured motorists and underinsured motorists. You have to know the difference between those two because that will probably be on the test. Okay, number 4 is coverage for damage to the insured's auto. Okay. And then there's something called duties after loss. That may be on the test. And what are duties after loss? Duties after loss would include if you're in an accident, there are rules, like you got to call the insurance company within so many hours or so many days. You have to, do a form. Let's say, for example, you got to fill out this form. You have to put all the information, the date, the time, the names. They're going to want all that information. And that's called duties after loss. And if you don't do that stuff, they may not cover you for that accident. So you want to make sure you do exactly what they're telling you to do. So you have to know what duties after loss are. That should be on the test. Okay, guys, now we're going to quickly go into commercial auto, just a tad bit. Commercial auto insurance is a type of insurance policy that helps cover vehicles used for business purposes, such as cars, trucks, vans. Commercial auto covers vehicle damage and driver injuries. Okay, so commercial auto is really good to know if you're going to move into the commercial auto industry, if you're going to move into that field of covering auto. Okay, so with commercial auto, you have business auto, you have something called garaging, there's something called truckers, there's something called business auto physical damage. There's also called multiple forms may be used in one commercial auto coverage policy. Okay. All right. So when you look at commercial auto, because you understand personal auto, because you have auto, I have auto. So, okay, I understand what it covers. It covers if I'm riding on the street, boom, I hit somebody, it pays them out, right? What does commercial auto cover? There's something called commercial crime insurance too, right? And it's also referred to as fidelity insurance. It protects businesses against loss from acts of dishonesty or fraud. Examples would be loss of money, securities and property. Others are embezzlement, forgery, and computer fraud, wire fraud, and acts or employee dishonesty. See the others below. Also, disappearance, robbery, burglary, and theft. So, commercial crime insurance covers quite a lot of things, and you need to know these things. I don't know if they're going to be on the test, but I would just know them just in case. And again, this is if you have a business. Let's say I have a business, let's go back with cannabis, because I'm going to do a course on cannabis insurance, and that's where these things come in, right? What if somebody burglarizes my business? What if somebody comes in and robs me and steals all my cannabis, right? What are you going to do? You need insurance for that. What if somebody comes in and steals something from me? You need insurance for that. So businesses have to have insurance for lots of different things. Okay. All right. So let's look at commercial general liability insurance. Again, we're looking at a business that may have insurance. They may have products, right? And products are considered what? Casualty insurance. So let's say you have a business, you want general liability. These are some of the things that they could cover. They could cover premises and operations. They could cover products. Let's say if you got your cannabis sitting there and you want to get that product covered under insurance, call insurance company. Hey, I've got 2 pounds of cannabis here. I need some insurance in case something happens to my product. Okay. They have something called completed operations insurance coverage. They also have contingent liability insurance. Okay. So let's look at the first one. Premises and operations. It deals with the legal liability of a business for loss arising from its premises and operations. I'm not sure in detail what that would look like, but premises and operations, let's say something happens where they couldn't do business, then the insurance will probably come in and cover that for them. And then there's number 2 is products. This is relates to goods and merchandise of the business that is manufactured, sold, held, distributed, or disposed by the business. Okay, so you can have general liability insurance to cover your product. Okay, because there's the transportation of product is sitting in your warehouse, the product sitting in somebody else's warehouse. The Peloton is at my house, and now my kid just got injured on it. products, general liability. Something happens to your product. As a result of that, there's insurance for that. Okay. And there's something called completed operations. Connection to finished services provided to customers, product installation, construction, and repairs performed. That's considered completed operations coverage. And then you have contingent liability. A business's liability for the actions of others while under the direction or control. Okay, contingent liability. We talked a little bit about that. I think that it's almost like Bailey, right? You have somebody else's product and you're having to be covered because it's in the possession of somebody else, or they have to have that covered. Okay. Then there's something called workers' comp, insurance. I'm sure some of you guys are familiar with that. If you're working, if you have a business, you have to have workers' comp. If you're in a company, you're working for a company, if you get hurt, let's say you get hurt on the job, what happens? You call workers' comp insurance and they may cover that for you. Okay. So workers' compensation is a state-run insurance program that covers the public sector and usually state and local government employees. Okay. If someone suffers a job-related illness or injury, workers' compensation insurance may help to pay for the medical treatment and recovered loss. I see the typo there too. Okay. All right, guys. Looks like we're almost done. This is like maybe the shortest module yet, which is nice because I thought it may go for an hour, but it looks like we may be finishing up here in the next 5, 10, 15 minutes or so. Okay, just FYI. Again, we're looking at workers' compensation and who uses workers' compensation. Agricultural workers may use it, domestic workers, officers and directors of corporations may have workers' compensation insurance in place. If you're a sole proprietor or self-employed, you may have workers' comp in place. What is it used for? It's used for injury, lost wages, or income. Example, I'm at work, I get injured, I got to go home. I hit my head or I bumped my head. I was working on something and boom, the door fell and it hit me in the head. Okay, I call workers' comp. They cover that. So now I got to go home. I'm injured and I'm losing income because I'm not working. So they would pay me out. What percentage, I don't know, but they would pay out. Okay. Yay, we're at the end. Okay, guys, that was module 4. We're at the end of module 4. And this is your knowledge check. I want you guys to email me your questions. My email address is there. You have my phone number. And the questions for this module are, number 1, who is the claimant in an insurance incident? Number 2, name 2 types of losses. Number 3, what are the different kinds of damages? Just talk to me a little bit about it. Type it up. Tell me what are some damages that could happen, in an insurance claim. What type of damages do insurance policies cover? Okay. What are 3 types of liability? When you look at liability insurance, what types of liability are there? We talked about that. Now, we looked at commercial crime insurance, this coverage for what types of losses. Give me 4 types of losses that commercial crime insurance will cover. And then number 6, what is the difference between an accident and an occurrence? We talked about that. So give me a little bit of information about that. And I will see you guys in module 5. We got 5, 6, 7, and 8. And the end is near. I feel it. So we got 5, 6, 7, 8. We have 4 more modules. We've gotten through 4. So we're like halfway there. I think module 8 is pretty long though. So that one you've got to buckle up for. But we're going to get through it. And then I think the next ones are pretty short too. They're not as long as the first ones. I think the first ones was the meat of it. Now we're kind of winding it down. Okay. All right, guys. So I'll see you guys next week. I'll see you in the next module, in module number 5. And if you have any questions or anything, feel free to email me. Give me 24 hours. If I don't answer your questions within 24 hours, feel free to call me. Leave a message. I will call you back. I will email you and I will answer your questions. Okay. All right. Thanks, guys. Have a good day. Bye.